Well, good afternoon, financial professionals. Today is Wednesday, April 27th. I am Brendan DeRouin, Chief Distribution Officer at E4, and have my esteemed partner, Dan Peterson, on as well. Today, we're going to be giving you an update on all things insurance. But before we get to that, we still have our national days, and we got a list of them today. So I'm going to pick out some of my favorites because there are too many, and I don't know why they often relate around food. But today it's also Stop Food Waste Day. So I think maybe I should just ignore all the rest of them: Gummy Bear Day, Prime Rib Day, Babe Ruth Day, which I guess really isn't probably food. It's more about the baseball player. But there are two more important ones I've honed in on. National Administration Professionals Day. So if you have a administrative assistant, make sure to thank them for all that they do, because it's Administrative Professional Day. And it's National Denim Day, which you could not have the Canadian tuxedo without denim. So there, we'll give a nod to that. Dan, it's now on to us.
It sure is. Would you
You
like
often
to,
don't know what to do with me, do you?
I never do. It's always a challenge. Keeps it hopping here at E4 Insurance Services. But we are going to do a little recap of 2021, and we did see some things that overall were concerning for our industry. And I think the biggest news was the high mortality due to COVID how it weighed on earnings, with death benefits being up 16% in 2020 and then another 11% in 2021. So that has put some headwinds in the industry, although we still can see product changes, and I think you've seen that too, that mortality-based products are still very competitive, and some carriers continue to try to lower term rates even more on fully underwritten business. So,
Dan, one point on that: claims are not up specifically due to COVID 16%, and then year over year 11% more, just because of COVID deaths. I mean, they factor into that, but there's additional deaths, which, whether it be suicide because of the condition, or complications to other missed screenings and other things, have all created increased mortality, and I think we're going to see that to go on for a while.
Yeah, the lack of care, access to care, postponing care, and our average mortality age has been affected by the opioid crisis and fentanyl and other things that have really started to impact people of younger ages. So we're seeing a lot of challenges there, and then you can also we're going to get into the interest rate factor, which carriers base their interest rates, their products off of corporate bonds, which typically are tied to the Treasury. We're finally seeing some lift there for our carriers, which will help offset some of these other claims that they're having. You want to talk a little bit about the growth of life and annuity?
Yeah, I mean, as you can see, numbers pretty apparent there. I think the time, really is ripe for a lot of our advisors out there to be promoting some of these safe products, given the turmoil that we're having in the markets these past couple of weeks, or even year to date. Ukraine, there's a flight to safety, and when that happens, insurance products are always they always do well. So you can see that growth, but I think to expect even greater growth in 2022 than we have last year.
We've also seen quite a bit of change, both with our carriers and then with the private equity in the distribution side of the market as well. A lot of dollars flowing in and restructuring occurring. Great American purchased by Mass Mutual. that Mass Mutual entering independent distribution. That's a new change. Ohio National restructuring, Voya, Equitable, Prudential, Principal with an activist investor that really put pressure on their board. A lot of major strategic shifts throughout the year.
And on that private equity, I think, with the market having been so high, in 2021 and beginning of 2022, there was not a lot of room for investment, that they've gone after other avenues. So be that the distribution side or large carriers. I was at a talk on life settlements last week, and they said the acceptable yield that they were going for was off of, historically had been between that 12 and 15%. And now they were looking for yield of anything greater than 8 as an appealing number. So take that as, for what you want.
And we've seen the private equity acquiring insurance companies, American National, American Equity, AIG is going to be a spinoff. So we're seeing continued change with some of our carriers on that side throughout the year and going into 2022. And then we mentioned this already, but the bond quality is one thing that, as we face potential headwinds with a recessionary, that can affect credit quality. But the biggest thing is the carriers are much happier about yields. We're seeing a lot of change in annuity rates, and already some carriers lifting even crediting rates on life insurance. So uncertainty, Brendan, what does that mean to you? Part 2.
Well, a lot of it has to, in my mind, revolve around labor and the great resignation and how we're going to be able to process and place the policies. I mean, we're facing a lot of headwinds there, and then as mentioned before, the equity in the markets. I think the rising interest rates is a good thing, not necessarily uncertain, but geopolitical, God only knows what's going to happen in our world.
And mortality, there's increased consumer demands. We just have less people selling our products. That's one of the continued challenges when you talk about the great migration, or people entering our business that are skilled and knowledgeable in crafting better financial outcomes. We've carried a lot of momentum into the year, and so our first April through April of 2021 versus April of 2022, our app count was up 3.7%. Our life numbers, our life premium, target life premium was up 57% year over year. And our long-term care, this first 4 months, it was albeit a small number, up a big. Link benefits, which is your asset-based long-term care, sales are up 75% year to date. And annuity premium, we continue to see really strong growth in our annuities, and the offerings that we have there, up 51% on a, so really strong growth. And that just brings us to a thank you to our advisors who continue to help to trust us with their clients' financial well-being and being a part of crafting better financial outcomes. Any comments there?
Yeah, I'm a bit of a numbers guy. I like to think that I am. And given that apps are only up, less than 4%, but we have double-digit increases in all of our product lines, tells me, two things. Clearly, yes, we're doing, bigger tickets. So that all around is good. But then also we've got, and I just know this anecdotally, that a lot of interest in estate planning. People are looking at, the amount of money that the government has spent, the upcoming tax changes. Those that are not waiting to the last minute are doing, some of their either estate planning or wealth transfer planning today, and it's creating larger cases. We also have supplemental retirement income planning in some bigger numbers. So those are something that you're not talking to your clients about, I would start, because there definitely is interest on the consumer side.
Well, where would we be if we didn't talk about some of the changes, both with our carriers and our industry? And I think the biggest change is what we have seen. We were the top performer for Symetra, the life insurance company, and their Swift term, where you now have instant issue term insurance available with not even a phone interview, just all electronically based, no blood, no urine available, and we've had policies up to $2 million issued within 17 minutes. That would have been unheard of just a few years ago, Brendan.
Oh, absolutely. And I think, some of the online portals, Bestow, Lemonade, Ethos have shown, that there is a, desire from the consumer standpoint to have, not have to deal with an agent or advisor and just purchase online. These are not, in my opinion, the best products, because a lot of them, if not, all of them, lack conversion. And I'm a big believer that, you're ensuring your insurability by purchasing a product that has conversion rights. That being said, carriers see this. We've realized that, there's a demand on the tech side of this. So the answer is some of this instant issue products. So I see more and more carriers that are going to do this, and more that you'll have as an offering to give to your clients. I also believe in the adage that life insurance, is sold and not bought. And clearly it is just bought, but I think if you can sell some of the features and benefits of what you have, and provide that additional value in ensuring their insurability, you are doing everybody a service. So more to come.
We continue to see changes there, and shortening of conversion privileges or conversion periods that don't last as long as the level term period, restrictions on what you can convert to. Those changes are continuing as carriers evaluate the mortality experience on their term insurance. So, Brendan, you have a saying I love to that you came up with about we were looking at Ethos and Bestow and their offering, and they don't offer convertibility of the term insurance that they're selling. And you talked a little bit about the importance of that. You had an analogy. You want to share that?
Yeah. So carriers are asking, well, if we could offer you, something cheaper, would that, is there benefit in doing that? And I said, depends. If you could sell me a car cheaper and not put airbags in it, does that have value? Yeah, as long as I don't get in a car crash. But I don't know what's going to happen. And this, the second I get in a car crash, I wish I would have, paid for airbags. So I look at conversion rights as, very analogous to that. It made sense to the carriers too when I framed it.
It did. No, it's a good, to make sure you have airbags on your term insurance. So I like it. Well, from a corporate, this is an update. We try to do these a couple times a year, but one of the things that we really focused on is continued growth and building of E4 insurance services, and the 4 E's remain part of our foundation. Those being energy, coming to work every day, not running out of gas in the fourth quarter. Energize, hopefully when you interact with our team, you're finding them having the ability to energize you on what needs to be done, why it's important, effective communication. Edge, we anticipate challenges. We want to empower our people to see it happen before it happens, anticipate the question, bring value in that way. And then last, execution. I think you can see from our results that we have a lot of execution that's going on, sales success and growth is all part of that continued improvement. And we also have a piece now, and I believe Danielle is going to put a link out to what E4 is, and an executive snapshot that we'd love to share with you if you wanted to know a little bit more about the people here and what E4 is doing, and what we are really focused on. So part of that growth is also investing back in our team. And Brendan, we merged in 2019, and shortly after the pandemic hit, and we always talked about, we wanted to come out of the pandemic and use that time to sharpen our saw, to build our team, to grow, so that ultimately we're better as an organization having gone through that. And part of that has been investing in our people, and we've really worked, actually hired for a firm to assist us and assist our people in getting us all communicating better, working together better, and growing the talent pool that we have. So enrolling our regionals that are interacting with advisors in sales mastery, NALBA University, which is a case manager training program. We now have designated certified case managers. That's been a big plus for us. And then focus on team building. We're still very involved in NALBA, NAFA. We're part of an association, Libra, and carrier events where we're constantly learning and sharpening our saw. It's really resulted in March of this past year, we were certified as a great place to work. So our growing team, 93% of our employees vouch that it is a great place to work. And a typical US company, well, 57% of people say that their company that they work for is a great place. So we're proud of that certification. Some of our staff responses that we're proud of for the first quarter here. I'm given the resources and equipment to do my job. I'm proud to tell others I work here. Our advisors rate the service we deliver as excellent. People care about each other. And when you join a company, you instantly feel welcome. So those are some really great comments from our staff. And it's one that we're going to continue to work on building that culture and making sure we remain a great place to work. Brendan, you want to talk a little bit about Back to the Future?
Yes, I wanted to make one comment as well, as as far as some of the outside resources we've used to develop our team, and I find it the same, in business as with my kids. Whatever I say is stupid, and if somebody else says it, well, then it's more meaningful. So if you have a larger organization and can have somebody else from the outside, either reiterate the message or teach it, sometimes it can be heard, better than if you tell it to your kids. So for whatever that's worth. But yes, building business together, our BBT. I think it's our eighth iteration of this. Glad to be back after a 2-year hiatus with COVID. We are going to be in Madison at the Fairway Building. As always, it's going to be a great event. And outside of content, I think one of the best takeaways is you're in a room with other advisors like yourself. Our advisors are always, cooperative, sharing. And what I hear is I take away more from talking, from other advisors and what they're doing, what's working, how they're doing it, than the content itself. And that's, no disrespect to the content. It's just you learn more from your peers. So same as that last message I said. So please, if you have not registered yet, do so. Danielle's going to post a link on where to do that. We have limited availability to 100. The room only fits 100, and we've had that many in the past. So given the pent-up demand to get back to the BBT, I imagine it will fill up quickly. So make sure to mark your calendar and reserve your spot.
Now, I don't see the date listed on the slide, but
It is June 2nd. It's a Thursday. Still before most summer vacation has happened, but after Memorial Day. So June 2nd is the date.
Sounds great. Well, I'm looking forward to seeing everybody at the BBT, and we do have the theme of Back to the Future as we move out of this post-pandemic world and into the future together. Great theme that we're going to have, and a lot of fun getting together. Thank you also to our carrier sponsors that have stepped up and are going to be part of this as well. So we couldn't do it without them.
There may or may not be a DeLorean in attendance. You'll have to come to find out. So, well, any other closing thoughts, Dan, or if you have questions?
I think that wraps up. If there is any questions out there, we're certainly happy to try and answer those. Otherwise, I think we have a drawing.
As always, who gets to pick the number?
I'll let you do it.
Well, it's the 27th, so might as well go with 27.
And who is the winner?
Dexter Albrecht. Congratulations. Next week, we have one of our very own, Dan Mythen, presenting. Dan is going to be going over, I had it here in front of me a second ago. Estate planning considerations for concentrated stock positions. So many clients have earmarked their company stock for their heirs. Some have an emotional attachment to their stock and are hesitant to diversify out of it. Dan will be covering a couple different solutions on how to diversify and provide for a guaranteed option for that legacy and wealth transfer. So be sure to tune in next week.
Well, thank you everyone for joining. We really appreciate you allowing us to provide this little update for E4 Insurance Services, and we look forward to seeing you on the next brew. Have a great week.
Take care.